I did want to get a little bit into what happened in the markets today, because last night here on the show, I discussed specifically that we had about 6 straight days of sell-off in the market, and I said expect a rally tomorrow and Friday. What we got today was exactly that. We got a little bit, and I'll tell you what, it was not a great rally today, but at least it was a bounce. And we did get back above the 100-day moving average, which has been important support for the markets up to this point. Now, that's the good news. The bad news is we were unable to get above the 50. We tried to do it today. We were unable to get above the 50-day moving average. Tomorrow is critical. We really need to get above the 50-day moving average by the end of the week. And this is what I said last night, is not to worry about this one-day sell-off that we had yesterday, although it was a big sell-off. I said, don't worry about it just yet. Let's wait till we get to the end of the week. Let's see where we finish out the week. And so tomorrow, we really need to get a little bit of a rally. I still think that's possible after today. We'll see what happens tomorrow as we close out the week. And the reason I think we can get a rally tomorrow is that it's the last trading day of the quarter. This recent sell-off in the market has gotten a lot of institutional money managers to sell positions out of their portfolio. They've had forced redemptions, whatever it is. And what they'll want to have on their books is they'll want to make sure on the end of the quarter when they report their statements, they want to make sure and have the stocks, right? The hot stocks. They got to make sure they have the Apple, the Netflix, the Googles, whatever it is. So look for some buying tomorrow, particularly in the tech space, because that was one of the areas hit the hardest over the last few days over this issue about Chinese investment into U.S. tech firms. So look for some rally tomorrow, and particularly in the tech space, like for instance, the technology sector of the S&P 500. Also look for a rally in consumer goods and discretionary stocks, because that's where you house Netflix as well as Apple. So those are 3 areas that will likely see some money flow into tomorrow. Also the banks, which have been under a tremendous amount of pressure. They saw a little bit of a rally today. I would expect to see that maybe even continue through tomorrow in some of the major bank names like JP Morgan, Bank of America, etc. So look for that tomorrow. If we can get this market above the 50-day moving average, close there for this week, a lot of this turmoil that we had over the last few days will actually have been negated. So again, where we finish tomorrow afternoon is going to be really important. But again, with tomorrow being quarter end rebalancing and window dressing, look for a lot of volatility tomorrow. This market could very well be all over the place. And listen, it is not outside the realm of possibility that this rally fails tomorrow and we get a sell-off heading into the weekend. Particularly next week is a holiday shortened week with July the 4th. So tomorrow really is effectively a crapshoot in all sense of the word, because there's so many things that are going on. There's a confluence of events right now that really suggests that this market's got a lot of pressure on it to the downside. We have daily sell signals in place. Unfortunately, I made a mistake. I'm going to be writing about this tomorrow in our newsletter for the weekend. I've got to write a bit of a mea culpa, because over the last couple of weeks in the newsletter, I've been talking about the weekly moving averages were turning up, and we were very close to getting our weekly buy signal, which would allow us to actually increase our 401k allocation model. And that turned out not to be the case. This week has actually turned that moving average back lower again. So the 75% exposure to portfolios will stay that way, at least for the time being, because, again, that signal continues to prove itself out. When you get a sell signal on a weekly basis, it has always worked out best to honor it and not take on a lot of excess risk. When we added some exposure back in early May, we've been holding off adding further exposure. We were getting ready to add some exposure here in this recent week, but because of the breakdown in the market, we've not done that. Again, we're still holding about 50% cash and fixed income. We're still way overweight kind of our defensive plays, and that's been paying off well so far for this last couple of months, and will likely continue to do so. We're definitely not out of the woods as of yet, and particularly as we head further into the summer, we've got a tremendous amount of weight laying on top of the markets, right? Earning comparisons are about to start to get much more difficult beginning in the third quarter. Economic data is certainly showing signs of weakness. First quarter GDP was just revised down to 2%. And right now, the Atlanta Fed is showing like a 5% growth rate. And of course, Jared Kushner and others have been running out, tweeting out how great the second quarter GDP is going to be and how it's going to be something fantastic. Well, I told you before, at the beginning of this year that we had a very similar print from the Atlanta Fed saying almost 5% growth. I said, wait, don't worry about that because that's all going to get revised down. We finished up at 2%. So this number now at the Atlanta Fed is going to be revised down over the next 3 months. We'll probably be closer to 2.75, maybe 3% at the most. Would not be surprising to be there simply because you had such a weak first quarter. But there's a lot of signs in the economy that things are beginning to weaken. We're watching existing home sales weaken. We're seeing durable goods becoming weaker. Auto manufacturing showing some signs of stress and strain. There's a lot of things that are kind of flowing through underneath the surface that suggests the economy may actually be slowing down here. And of course, the one big thing to be watching is the yield curve. And we've talked about this before, but the yield curve on the 10-year Treasury is getting very, very close to basically being zero and starting to head towards inversion. But that's not even as important as the corporate yield curve, which actually has already turned negative, which says that the cost of borrowing is now higher than the return on investment for companies. So that suggests we're going to see slower CapEx, and that's actually what we saw in the durable goods orders earlier this week, is actually a slowdown in CapEx spending. So that all directly translates into the economy, so you'll want to watch that very carefully. But all that is going to come to fruition in August and September, so that's not that far out. But the pressure is really going to start getting applied to stocks in the next couple of months. So we're going to be watching this very carefully. I certainly want you to go by our website, read our updates. I've got a post on tomorrow talking about debt. Today's post is called Everybody's Got a Plan Until You Get Punched in the Face, which is talking about basically 5 things that you need to be looking at that really don't support the bullish arguments behind the markets right now. So that'll help you get some of that. But if you need help, be sure to get by our website. If you don't have a plan to manage the risk, if you don't have a plan to deal with market volatility, go by our website, send us an email. Myself, Richard, John, Danny, we're all happy to help you. We apply very specific rules to what we do with portfolios, and we're happy to help you from your financial planning all through your investment management as well. Get by the website, realinvestmentadvice.com. You're listening to the Real Investment Hour. We'll be right back after the break with your questions and comments. Feel free to give us a call, 281-558-5738. We're going to teach you tonight about how to save tax dollars, how to prepare better for retirement, and how to make more money. Real Investment Hour. Be right back.
Follow Lance on Twitter @LanceRoberts or go to realinvestmentadvice.com.